Good morning, everyone. Welcome back to the channel, episode 63 of the portfolio update series, and we give thanks. We give thanks for another portfolio update. In today's video, I'm going to talk about the top movers and fallers within my portfolio for this week. I'm going to talk about one dividend payment, in fact, the largest dividend payment that I've received to date. So we're just going to put some shine on that for the time being. I'm going to talk about two stocks that I've sold and my rationale behind selling those stocks. And then I'm going to give a bit of insight into my strategy for the second half of the year. In fact, you know what? Strategy is a strong word. Let's say priorities. My priorities for the latter half of the year. So if you want to know all of that plus more, please like, comment, subscribe, help the channel get to 7K subscribers. Follow on Twitter and Instagram at Infinite Investors. And if you are new to the channel and you're wondering what application I'm using to invest, I'm using the Freetrade application. My link will be in the description and the pinned comment, freetrade.io/infinite-investors. Click on the link, sign up, deposit £1, and you will get a free share of up to £200. But first, it would be remiss of me not to address this, considering the current climate and everything that's been going on. I understand that you lot primarily see me as some financial YouTuber or whatever it is you see me as, but no, I'm just normal. I'm just a human being. I'm a man. I'm a black man, and one that's experienced overt racism in pretty much every single British company that I've worked in. I've experienced overt racism with police on a ridiculous amount of occasions. And then all of the other goofy stuff like not getting into clubs or being followed in the shops, etc., etc. Listen, racism is real. It's no cards. It's not a figment of mine or anyone else's imagination. Whether it's unconscious or conscious, it's real. And you could just miss me with all of that sweeping it under the carpet stuff. Like, there ain't no more space under the carpet, you feel me? This channel primarily is about making the stock market simple and making finance simple and making money simple. And I've been watching YouTube, I've been seeing comments on Twitter and also on Instagram about the whole Black Lives Matter slogan. And so, you know what, I'm just going to do my best to make that slogan simple for people to understand and give people the benefit of the doubt of who doesn't understand what we mean when we say Black Lives Matter. When we say Black Lives Matter, we don't mean only Black Lives Matter. We're not saying just Black Lives Matter. We're not saying solely Black Lives Matter. It's Black Lives Matter. And for all lives to matter, then black ones have to as well. But currently, unfortunately, they don't. They don't to police. They don't to corporate institutions. They don't to policymakers. They don't to most places, to be honest. And hopefully we'll start seeing a change. Although I don't believe that every single global company's PR campaigns of the past couple of weeks are genuine, I do definitely appreciate the sentiment. And defo hold tight Freetrade. Shout out to Freetrade, for shouting out me and all of the other UK channels run by black people spreading this money talk. And I really genuinely hope from the bottom of my heart we'll start to see some real equality and some real equity for everyone, you feel me? And people of all races and genders will be CEOs and founders of some of the biggest and best companies in the world, and all of us just getting this money, living good, feeding our families and making a difference, you feel me? That's what we're here for. We ain't here for long, so we might as well try and leave a good legacy on that. So listen, I'm not going to say no more on the situation. That's what it means. RIP George Floyd, gone but never forgotten. Anything else, leave it in the comments. Back to regularly scheduled programming. Market-wise, this week has been an eerily good week. And I say eerily because with the backdrop of everything that's going on and, not just the riots, unemployment, the economy as a whole, the coronavirus situation, the pending, beefs among the world between China and India, between Hong Kong and China, between China and the US, between the US and everyone. Like, literally, there's so much unsettlement that's going on around the world at the moment. There's so much unemployment. There's so much there's just a lot of pain right now. There's just a lot of pain that's going on, yet the market continues to rise. And this week is a prime example that the stock market is not the economy. Please don't use those words interchangeably. The economy is not the stock market. The stock market is not the economy. You feel me? The stock market, this is the way I've always explained it to people. Like, the economy is basically the production of goods and services, primarily speaking, in the most basic terms. You know, what we sell as a country and what we make as a country. That's the economy in the most basic terms. The stock market is just a representation of how people think and feel when it pertains to commodities, or when it pertains to companies, etc. Right now, people are feeling very, very bullish about a lot of these companies. There are some rational reasons for it, but I think there's also a lot of greed that's going on at the moment. So, you know, if you are new to the market and you've just bought some stocks over the past couple of weeks and you're like 30% up and you're thinking, I'm a G. Listen, you're not a G, fam. Like, be easy, because when that crash comes, when that correction comes, listen, don't be hollering at me asking me for tips or advice. It's real. Like, it will come and it will bite you in the bum. So just have a strategy. Make sure everything else is patterned, like I've always said. Make sure you're not in debt. Make sure you've got your emergency fund. Make sure you've got savings. Make sure you're investing what you don't mind losing. Make sure you've got your attitude to risk. And, you know, do all of the measured steps. And you know what, then if you are making 30%, then just, you know, enjoy that and live it up. It's been a good week for me. And yeah, let's get into the top movers. The first top mover I'm going to talk about is right at the top right now, is Aviva. So Aviva's gone up 17.07%. So when it pertains to all of the top movers that I'm going to talk about this week, there is hardly any company specific information, similar to last week. Now, there is company news that's happening on a regular basis, right? These companies release information, or information is released about these companies on a daily basis. But, you know, I personally try to deduce the signal from the noise. And what I mean by that is that there's a lot of noise that's happening, but what can I pinpoint that's actually attributable to the fact that this stock price has risen or fallen within a specific week? And none of the things I personally believe, you know, pertaining to the company directly is the reason why Aviva's gone up. My personal take on it is a broader level, the broader fact that because a lot of countries are, you know, they're relaxing their whole lockdown situation. You know, they're going back to 100% in terms of people going back to work. Things are starting to relax a little bit. So because of that, I think there's a lot of buoyancy, and potentially people are thinking, okay, you know, a lot of these stocks have been hammered. It's now my time to buy cheap, and hopefully they'll return back to some glorious heights in a year or so. And, you know what I mean, I'll make that back. So I think that's happening with pretty much all of my top movers. So I'm just going to whiz through this. The first top mover is Aviva at 17.07%. The second top mover is Virgin Money. Virgin Money's gone up 18.14% last week. It also did, you know, incredibly well. We can see it's gone up 48% in the last month. But I was buying Virgin Money back in the day at like £2.12. So it's got a long way to go. It's got about double to go for it to get to the levels that I was buying when I first started investing. So hopefully it will get to them levels. I can't see it happening this year, but probably, you know, hopefully at 2021 or some point. So, you know, I'm definitely going to continue to hold on to Virgin Money. Aviva personally, I don't think it's a stock that I'm going to hold on to. I am averaging it down at the moment, and so I did time some of that pretty well, and have benefited from that. But I just don't see myself holding Aviva as well for that long. I think I'd rather just hold Legal & General, which is, you know, my favoured out of the two insurance stocks that I hold, and one that I've mentioned on multiple occasions, so you guys know I'm not capping. You know, I'm telling you how I really feel. But Legal & General is the top mover this week at 21.03%. You know, this month it's gone up 22.39%, and yeah, it's good to see that Legal & General is back in the green for me. Virgin Money is back in the green for me. These are two stocks that have been very red, fam. Very, very red for a very long time. So it's good to see that they're back into the green. And hopefully that continues to rise and rise and rise. Maybe it won't do, because I still personally believe that the UK will go into a technical recession. That's 2 quarters of negative GDP growth. But we shall see. And I think if that happens, then these stocks will fall again, and maybe it'll be another buying opportunity. Who knows? But at the moment, you know, I've been averaging down for the past couple of months, to be fair. Virgin Money and Legal & General, I don't have any current intentions to sell, but Aviva I do. but I need to average it down some more because I don't really want to sell at a loss. So we'll see how long that one takes. In terms of the top fallers, it's basically everything that used to be a top mover is now a top faller. So the first one to talk about is Shopify. So Shopify has gone down 3.99% this week. Overall, it's a 6% gain for the month, but you can see it was at $825 a share not too long ago, the 22nd of May. That's when I was sitting at about 145%. Some of you like, sell Shopify, sell Shopify. Maybe I should have listened to you. We'll talk a bit about that later. But now it's sitting at $727 and I'm sitting at 125%. So I'm not complaining, but obviously maybe I could have been a bit more mindful of that early on. And I think as well, that's partly because things are starting to open up. So because things are opening up, maybe people are thinking, Shopify's revenues are going to start to decrease again because, it benefited a lot from, the whole COVID situation. There's this theory called, buy the rumor, sell the news, for those of you that are new to the market. And what that basically means is that when there's a rumor about something, people buy based off the rumor. And then when the actual thing happens, people sell because they feel like they've already benefited from the rumor enough that when people try to buy the news, they're a bit late from that standpoint. So this could be a bit of an example by that the whole COVID situation was kind of the rumor for Zoom, for Slack, for Shopify, for a whole bunch of businesses. But now the news is that we're in a new state where they've announced their earnings. We've seen how much money they're making, and now COVID is opening up. Maybe it's not as glamorous as it once thought. I still personally believe in Shopify. All of the stuff that I mentioned in the previous video. So I'm most certainly gonna hold. I definitely won't be buying any more. No fractionals, no whole shares, no nothing. You feel me? I'm either gonna sell everything or I'm just going to hold. That's my two approaches with Shopify. But yeah, it's gone down to 125. I ain't complaining, but hopefully it starts to rise up again in the future. The next one to speak about is Okta. So Okta has basically gone down 4.75%. I think this is a similar situation, another stock that's benefited primarily from the whole pandemic situation. And I think that maybe, people's bullishness is starting to relax, but, you have to also look at it over different trend periods. And if you look at it over the month, 13.78% is still technically up. So it's having a bit of a downturn at the moment, but I wouldn't say that necessarily it means anything negative about the stock. And quite simply, it could just be people selling off, making a little bit of their profit, and Okta could potentially start to rally up again. So, we shall see what happens there. I will continue to hold Okta. I definitely won't be buying any more, but it's something that I will continue with at the moment. The third one to speak of is Sentiment. So Sentiment has gone down quite considerably. It's gone down 12.28%, and primarily, I think it's the same. Sentiment is very much linked to gold, and gold is very much linked to a negative economy. When the economy is contracting, gold tends to rise. When the economy is going up, then gold tends to fall. And sentiment is quite linked to it. Now, in terms of sentiment as a business, I've talked about its earnings in a couple of videos ago. I've talked about its production numbers. I talked about all of its forecasts. And it's been doing phenomenally well. So again, this for me is another macroeconomic impact. It's less a company specific thing. And I've held Sentiment, as with Virgin Money, and a lot of these UK stocks from the beginning, and I'll continue to do so. Now, I've received a dividend payment. As I mentioned, it was my largest dividend payment today, and you can see it here, Legal and General. And that dividend payment is £165.33. Listen, that's a dividend still. That is a div. Listen, I already knew I was going to get £165. It wasn't a surprise to me because I mentioned it to you guys probably about 2 months ago, when I calculated how much I needed to put in and how much I was basically going to get out of it. So it's not a surprise, but it's a good dividend amount still. And it's just a reminder that, although I am transitioning to more of a growth strategy and I stick behind that, I will be leaving a proportion of, my funds in still dividend stocks in order to keep this going. And when we do start to receive regular dividends again, then it's definitely going to be welcome as well. Now, I sold 2 stocks. And before I get into, the fact that I sold 2 stocks, there's a number of reasons why I sell stocks, why a person might sell a stock. And there's definitely a number of reasons why I might sell a stock. One primary reason for me is to reduce the number of holdings. Like, I definitely want to try and focus on quality over quantity, and sometimes I buy certain things and then I kind of just hold on to it forever just because I feel like, maybe it will come back, and then I buy other stuff that I actually believe in while still holding stuff that maybe I didn't believe in as much. So that's something that I personally need to work on. One other reason why I like to sell stocks, why I need to start selling more stocks, is that I want to put the money to work in other stocks that I feel like, there's going to be a better performance. If I can put that money to work in other stocks, then, potentially the opportunity cost of me selling the stock versus putting the money somewhere else is greater. So I need to make sure that I'm putting the money in the best place I possibly can. And also to hold a little bit of cash in case this all comes crashing down, because, what goes up must come down, and it's just a fact of life, and I feel like this is going to come down soon. So I'd rather have some cash on the side so I can buy those opportunities when it does happen. I will say my biggest weakness in investing, I've got many weaknesses in life, but in investing, my biggest weakness is selling. I don't really know when to sell stocks. Like, it's something I struggle with. Like, I get really attached to stocks. Like, I get attached, Like, man, I let go of these stocks, you feel me? Free Vibes Cartel. I don't let go of none of these stocks. And I'm just like, I buy something and I truly believe in what I buy. Like, I don't really buy any stocks at a whim. You guys know the amount of research I do before I buy one stock. Like, it takes me about 3-4 weeks to fully try and get all over a stock before I buy it. So I buy it because I genuinely believe in it, not because someone recommended it to me and I just go put some money into it. Like, because of that, it makes it harder for me just to let go of that stock and be like, oh, it's not working. But sometimes you're wrong, and you've just got to accept when you're wrong. And you know what I mean? I'm going to take a cue out of the Bad B handbook and just be like, boy, buy. Stock, buy. And the 2 stocks that I said buy to this week, the first one is JP Morgan Emerging Markets Government Bond. You can see there's a buy here and a sell here, and I'm just going to explain what I've done there. And that's basically me averaging down. So this is my £3 a month dividend payer, what I was using to kind of cover my free trade £3 ISA fee. But to be honest, it's all good getting that £3 a month. Like, I don't knock a dividend amount of any side. I was gassed when I received a 3p dividend. Like, don't get me wrong, I get gassed at dividends. But at the end of the day, the money invested in order to get that, I felt like I could put it to better use. So this is for me saying that I don't think there's anything wrong with the stock specifically, but I just feel like the money that I had in there, about 1,000 or whatnot, I could put that money to better use, and hopefully gain a bigger return in maybe a US growth stock or some other type of growth stock, etc., etc. So basically what I've done here is I averaged it down to about a 1% capital gain loss, and then after averaging it down, I then basically made the sale. So, overall, I'm probably about a couple of percent up when you actually calculate it with the dividends. But I made a tiny loss in order to facilitate this trade and to get that money. The second one that I've sold is First Solar. Listen, First Solar for me was a bad investment. Like, I have to admit, I took an L on First Solar. I took a bit of an L on this one, and yeah, it's just something that I have to accept as something that I've done. I took about a 6% L on it. Ugh, I lost about 2 bills, and I can't lie, 2 bills definitely hurts me, man. Like, 2 bills hurts me to lose, but I needed to do it. And it's something that I just gotta get over. Like, listen, I'm gonna give you a quick story. Yeah, I remember one time about 6 years ago, I went to visit my boy in Paris, and he was working in Paris. So in the daytime he was working, so I was obviously on my own doing whatever, and then in the nighttime we'd go out and whatnot. So one of the days I went out and I didn't really have nothing to do, and I see one of these one of these little like street urchins, like straight out of Annie or Oliver Twist or one of them shows. He's just there doing this little cup in the ball trick and whatnot. And I was watching other people bet to see which ball this cup was in. And I swear down, I got it right 100 out of 100 times. And I was like, how are these people so dumb? Like, can you not see what ball the cup is in? Like, it's so bait. Like, it's just in the middle one, or it's in the left one, or it's in the right one. They're all getting it wrong, losing their P. So I thought, all right, cool, let me just step up into this thing. I stepped up, he did it. I was like, yeah, it's in the left one. Lifted up the left one, empty. I was like, what? So I lost 100 euros, but I thought, all right, it's calm. You know, everyone makes a mistake. Let me just get it back the next one. So obviously he does it again. And then some man tried to come up to me and start saying, oh, is it this one? Is this one? I was like, brother, if you want to see tomorrow, you need to step back. I'm going to need you to back up off me. I need my space right now. I need to be in my headspace. So because he came near me, I didn't trust them. I didn't trust none of them. So I was like, do it again. I was like, I want to start afresh. Do it again. No one near me in it. I need my space in it. So he did it again. And I was like, oh, it's in the middle. Like, this is so easy. Bro, I got it wrong again. I lost another 100 euros. Like, I felt so naked. Like, I literally felt, you know them dreams when you're naked? I literally felt like I had one of them dreams. I felt so finessed. Like, they just finessed me out of 200 euros. And I had to take an L on that as well. And listen, it's 6 years on and I'm still hurting from that. That was a big L. That was an international L as well. So them ones hurt different. Like, you know, when you take an L abroad, that's a bigger L than when you take a domestic one. Trust me, man. Them international L's, trust me, you don't want to take that. So listen, losing 200 hurts. Selling First Solar at a £200 loss hurts. I'm not going to lie about it. I probably need to make about £2,000 off a stock before I can actually get over a £200 loss. But it is what it is. Again, I personally feel that, you know, transparently, it was a bad investment. I made a wrong investment choice, although it did take me, you know, a lot of research and it met my criteria back in 2019 when I did buy it. And it was doing well originally. It's not been doing well for a very long time. It started to rise up a little bit recently, but I have to just chalk it up to a bad investment. That's a bad investment that I made. And that's why I really hope that any of you guys that are watching this channel, that you are not copying me. You're not copying investments that I make. Like, don't just assume that because I've bought it, it means it's a good investment. Please do your own research and please make sure that you are happy with what you're buying. But yeah, I sold First Solar. I took the 2 bill L. And, you know, I'm ready to put that money into new stocks and other stocks going forward. Now, when it comes to my priorities for the second half of the year, I got 3 major priorities based off everything that I've just said to you in the previous part of the video. The first one is averaging down stocks that are making a loss. That's like one of my number 1 priorities. You can see that I tried to do it here with Imperial Brands and Barrett yesterday, but you know, Fruittrade tried a little bit of a ting because I couldn't really do that. But I did some research and I don't think it was a Fruittrade issue. It seemed like there was issues with a whole bunch of other stock companies as well, stock brokers or whatnot, that trades weren't being able to be executed yesterday. So, you know, it is what it is. But yeah, I tried to average down Imperial Brands and Barrett because, as you can see from my portfolio, Imperial Brands is 22.78%. So I wanted to average that down, and that's still paying a dividend. Although they've made a 33% cut annually, they're still paying their dividend. And I tried to do average down Barrett because Barrett I genuinely believe in for the long term. And I thought to myself, you know, Barrett, I mentioned to you guys, Barrett was my favorite British stock of all of my investments. And so, you know, just because it's down now, it's definitely one I'll continue to hold in the future when it does start to pay its dividends again. So I thought, you know, what I should do is actually be putting some money into this while it's low. And then obviously, you know, hopefully laughing in 2021 and beyond and that. So I tried to average those down, but it didn't work. So, you know, I'll be doing that on Monday morning, you know, when the market opens, and we just get back into it from there. The second priority, apart from averaging down, is purchasing 1 or more of the new stocks on my watch list. So I've got obviously a lot of stocks on my watch list that I've spoken about before, but I've got some new additions, man. There's some new additions based on Fruittrade's new 250 stocks. First edition is Splunk. I've spoken about Splunk on a number of occasions. Yeah, man, that big data, bruv. I'm trying to get that big data money. But listen, I've been looking into Splunk, and I feel like the time that I was going to invest was like $90 at that time, and it just feels a bit too expensive now. So I don't know if I'm going to still invest into Splunk, but I've got it there anyway. The Trade Desk, ServiceNow, Cloudflare, Virgin Galactic, Autodesk. These are my priority watch list stocks at the moment. You know, one of these stocks will be featuring within my portfolio. I've still got a lot more research to do on all of them, to be fair, even Splunk as well. I've still got a lot more research to do, which I will be doing over the coming weeks. And then I'll be deciding what money to be putting into where, and then obviously you guys will definitely know about it. The third priority that I've got for the second half of the year is to load up on any of the UK stocks that I currently hold, that I still want to hold. I mentioned to you guys that I want to be probably more 80-20 focused on growth, and the 20 that's value stroke dividend stocks will be primarily UK, to be honest. And those stocks, I definitely want to have bigger holdings in them stocks. So, you know, Legal and General, Lloyds as an example are two stocks that I'm definitely keeping. Like I'm just not selling them. So because I know I'm not selling them, I might as well try and put as much money in them now while they're down, so that when they do start paying their dividends in 2021 and beyond, hopefully I'm laughing, and hopefully the capital gain appreciation when, you know, the economy starts to get back on track or whatever, will be good. So yeah, that's my plan. Virgin Money is a stock that I still feel like I want to hold, to be fair. Sentiment, like, that goes without saying, I'll definitely be holding. Barrett and Taylor Wimpey, I think I'm probably leaning towards, you know, Barrett, and maybe leaning towards selling Taylor Wimpey, but no firm decisions have been made on that. But yeah, any of the UK stocks that I believe in, I definitely want to be loading up on them while they're down now, so that when it comes to 2021 or whatnot, I don't even have to buy into them. Like, I don't even have to invest into them. I can just invest into growth stocks, or into new opportunities, or into other things, because that money's already sitting there and it's generating, etc., etc. So yeah, that's effectively the plan for all of that. But listen, I hope you found this video useful. If you did, like, comment, subscribe, get in the comments if you've got any questions about, you know, anything that I've mentioned today. And listen, man, obviously I put out the whole Black Lives Matter stuff at the beginning of the video, so I'm not going to talk too tough on it now. But it is important, man. It's important that we find a way to make sure that, you know, everyone is on an even playing field, and people aren't, you know, put back just by, you know, characteristics that they were born with. You know, it's really important that we get past all of that. So yeah, hopefully you lot have a blessed week. Hopefully, you know, be blessed weekend rather. Hopefully next week will be, you know, more positive news. What's going on in the world, I doubt it, but, you know, we'll see. And yeah, we'll catch you next time with more investment videos. I've got a bag of investment videos to do. You know, a lot of you have been DMing me, and I've just been saying add it to the list. There's a list there. I just need to find time to do it. It's been a bit busy for me, but I'll definitely find some time to do that. But yeah, hopefully you found this video useful. If you did, like, comment, subscribe, and I will catch you next time with another investment video. Take care. Peace.